Hello and welcome back to my non-renewables, what I don't think it's personally going to work. We're going to be looking at the data. These are going to be weekly, bi-weekly updates. So if you want to keep in the loop, make sure to subscribe. It's a brand new channel called Commodity Insight, where I'll be keeping you in the loop with all kinds of commodities: oil, natural gas, copper, uranium, non-renewables, fossil fuels and that sort of stuff. So you want to build the fundamentals. What does the supply look like? What does the demand look like to help you become a better investor in the commodity market? Maybe you're new with commodities. Maybe you just like the S&P or the Magnificent Seven. So I'm going to try and open up where the value is in the market, and in this series we're going to go over non-renewables, and why they could be struggling. So jumping straight in, you can see here the world's energy split. So the renewable world is far in the future based on the present rates of increase. So looking at the market share, what does it kind of account for? And you can see here that slight increase, wind and solar only accounted for less than 5% of the global energy use in 2022. Wind, solar and nuclear accounted for less than 9%. You can see here at the bottom, biomass, burning kind of wood pellets is something they're trying to substitute for coal. But you can see here from oil, you can see the absolute growth in oil. Natural gas, again, massive growth. It's historically very cheap at the moment. So again, might be leveraging more of that. More facilities are getting built out because it's cheap. Once the price goes back up, the infrastructure's still there. We're still going to burn it. Nuclear, you can see here, there's a big push on nuclear. A lot of it's kind of coming into its media stage at the moment. A lot of attention on nuclear. If you said nuclear energy about 4 or 5 years ago, you'd probably be punched by Greta Thunberg. So that's working its way up. You can see the tiny little amounts of wind and solar. So yes, it does have a lot to grow. It's a big ask, it's a big ambition, but let's look into supply and demand and the sort of the fundamentals of it. So looking at the world energy split, this is just a quick one. So the global CO2 emissions have increased by 18 gigatons, 93% since the first World Climate Conference in 1979. Obviously, we know it's going up. They keep banging on these parties about how bad it is for global warming and stuff like that. But what I want to show you is it's not changed yet. It hasn't peaked. It's not coming down yet. There's a slight kind of steady off there. Are we on the other side of it? Or is it going to be a lot more from a top-down approach really forced into this? There's definitely a crisis. Renewables have to help. It's just how much can it help, and is it too little too late? So looking at the renewable market, you can see here the world has spent $4+ trillion, about $4.6 trillion, trillion, not billion, trillion, on alternative energies. So the likes of wind, solar, biomass, stuff like that. With that, it's reduced the market share of fossil fuels from 82% all the way down to 81%. $4.6 trillion for a reduction of a 1% market share. And again, this is quoted by Rick Roll. He's absolutely amazing. If you're looking to look into commodities and you've got some time on your hand, it'll open up a whole can of worms on YouTube. But Rick Roll is an absolutely amazing, very well respected in the investing space. He likes a lot of speculation across all these commodities. Definitely go and check him out. So coal is gone. You're led to believe from governments coal is completely. We don't use coal anymore. Like, it's a dirty commodity. We don't use it. So that the record high demand was 2023. We're using more and more of it every single year, despite the media saying that we don't use it. It's dirty. We don't want the smog. We're phasing it out. The record year was last year, and no doubt will probably hit an even increased demand for 2024. So you can see there, demand is expected to grow in India, China. It is expected to decline in the United States and kind of the Western world. But the growth India has, the growth China has, the likes of Pakistan, Africa is getting on the board. Is coal really gone? Or are we still going to go up? You can see here as well, what an energy transition. And you can see here, global coal-fired generation by region, 1985 to 2022. You can see there, so kind of North America is kind of stable, slight decline. You've got Europe pretty much flat, Africa at the bottom, and you can see here Asia absolutely just ripping it, going all the way up 8,000 watts even, so absolutely massive. You can see the comparison there, almost 8 times as much as the likes of America. And Africa, I just mentioned, is along this bottom line. So are we going to see a raise in that as they become more developed? Again, there's 3 billion people that don't have sufficient energy, constant energy, like the fridge running. There's 1 billion of those people that don't have energy at all. 2 billion intermittent. So can you deny someone turning a light switch on and nothing coming on, even though the Western world's had all that and we've used that? Can you then say no to someone else? You can't expect them to run like Africa. You can't expect them to run EVs. You can't see a Toyota, whatever hybrid car go past. they're going to need to use oil, they're going to need to use coal, the cheap energy demand. And you can see this here with Asia absolutely rocketing. China is building record amount of coal plants around the world. So the green energy U-turns, you can see here France drops renewable targets, prioritises nuclear and new energy builds. So yes, nuclear is a massive phase on it, is kind of green energy, people are waking up to that now, but you can see here France drops renewable targets. They're just not going after it. Labour here in the UK as well, massive U-turn. 28 billion albatross plan, completely dropped. They've just had to insist party needs to adjust position when conditions change. They're all just dropping it. They're starting to see a U-turn on this renewable stuff. Looking to EV then, electric vehicles, of course, a massive adoption. You can see this around the world. You can see a lot of the car brands, especially the UK, were told you can't produce an ICE vehicle, internal combustion engine, 2025 onwards. Again, there's been a U-turn on that as well by Rishi Sunak, complete U-turn. He's now extended it, I believe, to 2030, maybe 2035, which they're not happy about, the car manufacturers. So breaking, Ford cuts F-150 Lightning production to achieve optimal balance of production, sales growth and profitability. So out of those three, which one do you think it's impacting? So did customers speak, or will carry on the EV misinformation? So you can see here the energy transition will take longer and oil and gasoline needed for much, much longer. And following on from the EV transition, Ford lost a whopping 4.6 billion on electric vehicles last year. So you can see here, this is quoted from the company sold 72,608 electric vehicles last year and had an EBIT loss of 4.6 billion in its Model E segment. And you can see here the auto giant lost on average $64,731 for every EV sold in 2023. For every single car sold, that's how much it lost. And I believe the new spec for one of the electric cars is around, I think it's 62,000 sales. Go and have a look on their website, go and see what they're selling for. They're losing that per EV in 2023. Crazy. So Hertz as well, massive rental car company in America. It is in the UK as well, but not as big. Hertz is selling 20,000 EVs so it can buy more gas guzzlers. And they've quoted here, to balance a disproportionate number of lower margin rentals and reduce damage expense associated with EVs, Hertz global electronic fleet will shrink by 1/3. So is it that it's just not profitable? Is it that consumers don't want it? Is it they've said they're lower margin rentals and reduced damage expense? But when you fly into a new country, especially UK's not that big, but for example, if I fly to America, I don't know where the charging ports are. If I fly to Canada, Canada's even more remote, barren land, wasteland. I don't want to try and find where the EV charging points are. If I have oil, I can just fill it up. There's going to be petrol stations and stuff like that. So is it the infrastructure that's not caught up yet? What is it? Why are these companies losing so much money? Can the Western world just not make them as efficient, as cheap as the Eastern world like China? What's going on? Why can't we do that? And following on for Hertz as well, even more bad news. They've now, after buying more gas guzzlers and getting rid of Teslas and stuff like that, they've now paused plans to buy electric vehicles from Polestar this year. So originally they had plans to buy tens of thousands, so 65,000 Polestar cars over a space of 5 years, in a deal likely worth $3 billion as a part of an ambition. But you can see here that by late last year, following a collapse of the resale value of EVs and citing high repair costs, Hertz said it would sell some of the Tesla cars it purchased and would not meet the 25% EV target. Again, it didn't want to comment on the state of its relationship with Polestar at this time. So a massive U-turn, from Polestar. Not Polestar, sorry, Hertz. All these things get mixed up. So a massive U-turn from Hertz going against Polestar and the EV demand and narrative. Going on to wind then, is wind any better? Wind is expensive, same with sort of solar. So you can see here, UK's net zero ambitions at risk after disastrous offshore wind auction. So what they did here, you can see at the bottom, EDF Offshore Wind, it was revealed last week that no additional offshore wind farms will go ahead in the UK. After they did a round of bidding, not a single bid was made in a government auction. Not a single bid. So they kind of go around and say, oh, anyone want to bid, anyone produce these? The government's backed out. It's just not very profitable. They're not making money. And the trouble is, a lot of space with these EVs and this wind and solar, it's all very well and good when you've got the government subsidies and you get the government grants. When electric vehicles first came out, the early adoption, they were like, oh, we'll have £10,000 off or get a free charger, or now the subsidies are going and they're being removed and the governments are running out of money where we're going, no one's bidding. There's no subsidies. There's nothing to help. And you can see here Siemens, whacking great energy producer. Seaman Energy, their offspun company for the energy sector, sees 4.5 billion hit. The win-loss prompts review. Manufacturer identifies charge of 2.2 billion in wind unit. Company to present result of strategic review. So again, a massive internal U-turn on where we're going. You can see it launched a strategic review of its wind power business as problems with its turbines are expected to cause a 4.5 billion net loss in one of the industrials Germany's biggest companies. And this is a great one as well. Again, anyone from outside the UK, anyone inside the UK, Channel 4 did an absolutely brilliant documentary with Guy Martin. He's got 3 episodes on there. I think one's about the national grid. This one I've quoted here is the wind farm. And he did one on nuclear as well. Very, very interesting video. What was funny to me is that, of course, what is annoying as well with wind, of course, there's that joke of, it only works when the wind blows. However, there's some other drawbacks what people don't know about. If it blows too hard and it's too windy, you have to turn the turbines off. It can overheat the turbines and melt. Not really brilliant. Also, they've not worked out the battery capacity yet. So the trouble is, once you've stopped making that electricity, they turn the turbines off. Even if it's windy, it might be a brilliant day, they turn the turbines off because there's no way of storing that electricity. We need to find a way of storing it in battery technology so we can deploy that later on. And this is just the last slide here, 2023 performance. You can see here, this is comparing the S&P 500, the Global Clean Energy Index, and the Oil and Gas Index as well. So you can see here from 2023, S&P and the oil and gas are done okay, but you can see an absolute poor performance from the renewable clean energy sector. And again, this is tumbled on poor profitability. Of course, we're not in the best economy at the moment with interest rates spiking higher and higher. Of course, a lot of this is funding. Again, you saw the government didn't want to put any money into UK companies for a round of bidding. So the trouble is no one's got any money. You have to take out whacking great loans. Of course, if interest rates are higher, that's not going to be as profitable again. So it's really damaging this at the moment. So this could be a good if you're a contrarian investor. There's some brilliant value space in there for when interest rates come down again. I don't personally invest in this sort of space just because I don't see the technology working. I do see a place for electric vehicles in towns and stuff that's already adopted them, and those big Western worlds that have the technology. I don't see a full rollout. The other thing as well is the infrastructure of the national grids, whether that's America, whether it's the UK, simply needs to be rebuilt. If everyone turned on their electric vehicle charger at the exact same time, the power surges would be immense. And I do have a graphic for that. I'll put it in the next video. The power surges across America are going crazy. People are having outages all the time just because these renewables are not stable. They're just pulling large amounts of energy, then nothing, large amounts and nothing. So that's what I'm going to leave you with today. Be sure to subscribe to the channel. I'm going to bring these out kind of weekly, bi-weekly, of renewable to fossil fuels. What's the narrative looking like? Is the fundamentals good? Are they bad? I'm also doing other ones for oil, crude oil, the tanker market, and everything that's happening in the Red Sea, oil and gas, natural gas, Henry Hub natural gas, and the likes of copper, base metals, iron ore, coal, that sort of stuff as well. So it's a brand new channel. It would be brilliant if you could subscribe. Also, you can see below as well, if you are on Trading 212, or if you're not at the moment, it's an absolutely brilliant platform for those in the UK and in Europe. You get a free share if you use my link below and sign up to £100, and I get a share being fully transparent, and you also get a share as well. Then you can go and invite your family and friends and stuff like that. So well worth having a look. Check the link in the description. Any problems, do leave a comment. I can resolve that for you. But thank you very much, and see you in the next one.